Hello and welcome to this lesson on the difference in financial reporting structures and reporting tools. After completing this lesson, you should be able to explain the difference in financial reporting structures and how that drives flexibility in the use of different reporting tools within the Oracle Cloud. Fundamental to a successful implementation is understanding the financial reporting structure that needs to be in place to provide accurate, auditable results for all stakeholders. Reporting needs can vary from country to country based on generally accepted business practices or by acts of law. In highly regulated countries, the accounting rules are specified in law, and these rules-based countries often define a countrywide common chart of accounts to be used. This has to be used when submitting any legal reports, both company results and taxation filings. In less regulated countries, there is still a requirement to submit a company's legal results, but the accounting principles chosen by the business and the company's own design chart of accounts can be used to produce audited results in line with business statutory and internal requirements. Whatever the reporting need, the essential challenge is how do you configure the financial reporting structure to achieve real-time reporting for all stakeholders across the enterprise. To be fast and nimble, you need the right data, not more data. In implementations, you may ask the following questions. What is the optimum amount of data for finance? Where do you store data that you don't absolutely require in your financial system? What type of analyses are useful? How much data do you need to benefit from data-driven innovation? Let's investigate more. In financials, a traditional ledger has three key requirements, which are considered the minimum amount of data. These are the company, depicting a whole or logical part of a corporation, legal entity, organisation, an account to record balances and organise financial information and reporting, a centre, which is a logical unit within your organisation, like a business unit, department or group. Organisations typically use more than just these three segments in their financials. Other examples of segments that are commonly used are local and products. Most companies would need 6 to 10 segments to drive their reporting needs. In finance, with SAP ECC, there are some important organisation structures that can be different if you are speaking about FI, accounting or CO controlling. Accounting requirements are met thanks to a company code representing the legal entity of a company. Each company code can be used 1 to 3 chart of accounts, an operational chart of accounts that is used to post financial documents, a group chart of accounts for group reporting, and optionally an alternative chart of account used for local reporting, e.g. the French chart of accounts is compulsory in France for all companies. The company code is used in all accounting transactions, whether it is general ledger or subledgers, as accounts receivables, payables, etc. For asset accounting, a dedicated chart of depreciation is used per country by country in order to pilot the different accounting rules. Controlling requirements are managed through two structures, the operating concern and the controlling area. The controlling concern is the highest structure and enables you to analyse the profitability of the company thanks to a common profit and loss structure with group segments or characteristics. The controlling area represents the structure where the cost objects as cost centre or projects are defined. Cost allocation rules can be shared for different entities under the same controlling area, for example. Now that we have reviewed the building blocks of financial reporting in SAP ECC, let's take a detailed look at how this can be achieved in Oracle Cloud. The key setup for the Oracle Cloud financial reporting structure is the design of the chart of accounts. To complete the creation of at least one primary ledger, the chart of account structure instance, as well as an accounting calendar, currency, and an accounting convention such as IFRS, International Financial Reporting Standards, are all required. This we'll often hear is referred to as the 4 C's, and 5 C's is you add country specific setup. The chart is configured by defining a chart account structure instance, which can consist of up to 30 fields or segments. For each segment, a value set is created, which consists of values, both child and summary. The values, once combined between segments, are stored in a code combination table. Security rules define which values are seen by different job roles users, while the account hierarchies are where you can define multiple trees with versions to summarize balances between value ranges. Finally, cross-validation or related value rules controls which code combinations can be combined in the cloud system. Once defined, the chart of accounts instance is used across the products to define account combination codes and is used for account balances inquiries and reporting, thus providing a single source of account definition across all the Oracle Cloud products, a single source of truth. Looking at the chart of account structure instance in detail, leading practice suggests between 5 and 7 segments with additional spare capacity to allow for future changes. The core segments for the primary and secondary ledger are shown in the diagram. Please note that Oracle Cloud ERP mandates certain segments, balancing, cost center and account, while others are a business choice, although some such as intercompany or spare may be recommended. Most organizations have moved or are moving to a thin GL structure with a minimum number of segments. The simpler structure, fewer chart of account segments, can leverage the subledger functionality for detailed transaction analysis. The account code referred to in Oracle Cloud is in fact a multi-segment structure that can have unlimited reporting hierarchies. With these reporting trees, you can easily sum balances to give a past, present or future view of balances. The values in each segment or field are combined to form a unique account code combination identified by its primary key, called the Code Combination ID or CCID for short. General ledger balances are stored in a GL S-base cube or cubes. These S-base GL cubes are critical to the rapid reporting of account balances and are summed or pre-aggregated at all levels of the reporting tree hierarchies. The cube will be created automatically with all the segments of your chart of accounts as dimensions, plus other attributes such as date, currency and balance type, etc. It is the foundation for account balance reporting and analysis in Oracle Fusion Cloud. The Extended Spreadsheet Database, or SBase, is a multi-dimensional database management system that provides a multi-dimensional database platform upon which to build analytic applications. Its use in reporting on account balances has the following advantages: highly efficient data storage, very fast data access and retrieval, data organized in a dimensional model, easy for end users to understand, powerful dimensional calculation engine. Users with the power of Excel spreadsheets and the SmartView add-on can quickly learn to create ad hoc reports for analysis and deep dive of financial data. Other tools can also be used to create professional reports delivered in a variety of formats. After understanding the flexibility in building the chart of account segments, an expert would also need to know the construction of ledger types and which ledger to design to aid in effective reporting and in financial consolidation. Oracle ledgers can be put into federated structures. That means they have a structure of ledgers that may share some key data elements like cost center or accounts, but they can also have other independent data elements in their structure. Each ledger has its own accounting method, calendar, chart of accounts, currency. Please note there are no calendar restrictions in Oracle Fusion Cloud. You can define up to 365 periods a year, i.e. produce a balance sheet every day. The example on the slide shows a primary ledger which could be fed with local subledger currency transactions that can be automatically converted into a corporate currency for consolidation by using a reporting currency and by providing the exchange rates. The secondary ledger with a local chart and local accounting method can also be used to produce local legal required reports, and balances for reporting consolidation could be taken from any of the ledgers. Different reporting requirements can be addressed in the cloud with a combination of ledger types, primary, secondary and reporting currency, and an automatic federation of balances across ledgers with the objective of producing local reports as well as driving an efficient consolidation process. The federated structure of ledgers can be easily seen in the close monitor. The close monitor is a single UI providing a summary of subledger closing activities per ledger and a hierarchy of ledgers grouped into a ledger set. This provides a single solution for financial transparency and auditability during the period close. The close monitor provides information about the period close status for a given accounting period across multiple products for related ledgers in a hierarchy ledger set based display. Uses the hierarchy ledger set to mirror the consolidation relationship and roll up of entities across the enterprise. Summarizes period close status information for each ledger across multiple applications and for each consolidation node across multiple ledgers. Provides the contract information of the manager for a given node on the ledger set hierarchy. Indicates the number of subunits by module for the ledgers. It also displays the fractional indicator, where applicable, of how many of the subunits are in closed status. Figures can also be pre-consolidated in real time in order to have a snapshot of the performance for a dedicated ledger set. Secondary and reporting ledgers can be used to get the data in the same currency. It summarizes high-level income statement results for each entity and aggregates the financial information at each consolidation node. Displays each of those elements of information, period status, manager information, and financial data via separate tags that are navigated to for each node of the interactive hierarchy display. Provides views for a given ledger set for a particular accounting period and currency. This slide summarizes the tools that can be used on Oracle Cloud to produce reports and the sources of that account balances data. From the account balances stored in the GL Essbase cubes, you may be asked to write various user-defined reports. These could be board-ready reports produced in several formats, running frequently, i.e. monthly, and created in Financial Web Reporting Studio, or infrequent internal ad hoc reports produced with the power of a spreadsheet. Oracle Transaction Business Intelligence driven by pre-defined subject area views and BI publisher tools often used for high volume analysis can also be used to create specific customer required reports. Oracle has created pre-built analytics offering specifically for Oracle Cloud applications ERP, HCM, supply chain, CX and so on, so you can do your job smarter and faster. Oracle Fusion ERP Analytics is one of those analytics offerings specifically for Oracle Cloud ERP. Get the agility you need from your analytics so you can spend more time analysing and finding answers faster and less time dealing with data complexity. The key takeaways are: it's pre-built, ready to go, helping you gain analytics agility. Included is a pre-built data foundation. We've done the hard work of dealing with data complexity so you can focus on analysis and action. Currently there are over 200 plus ready to use KPIs analysis to jumpstart your reporting. Fusion Analytics unifies the business to eliminate data silos, giving you a holistic view of the business. A single extensive analytics data model that brings all your Oracle Cloud applications data together from ERP, HCM, SCM and CX to do cross-functional analysis. And it's extensible to fit your business by allowing you to combine other data sources into your analysis in a variety of ways. Offers a modern, intuitive, personalized user experience. With innovative personalization user experience for everyone in their organization, discover insights in new ways with machine learning and natural language innovations. In order to extend the capabilities of the financial system ERP cloud to effectively manage financial performance, the EPM Cloud Suite, aka Enterprise Performance Management, drastically accelerates other financial operations. The suite connects all planning, from long-range planning to bottom-up budgets and forecasts, and business unit planning that incorporates best practices, profitability and costing management. Help companies of any size lead with confidence in the digital economy. With industry standards and modern best practice, Oracle EPM Cloud helps you drive accurate, agile plans across the enterprise to analyze profitability, manage costs, and accelerate the financial close. It helps to close the books and report performance with confidence, containing comprehensive consolidation and close process orchestration, accounting reconciliation, tax reporting, disclosures. It reinvents analytics and reporting by collaborating narrative reporting and interactive dashboards, and meets business requirements regarding regulatory and XBRI filings with disclosure management capabilities. It helps to outperform with intelligence, with embedded machine learning, intelligent process automation and natural language processing, and aligns enterprise data across EPM and all financial systems. In summary, in this lesson, we have reviewed the differences in financial reporting structures and how that drives flexibility in the use of different reporting tools within the Oracle Fusion Cloud. Many thanks for watching.